In 2019, CSBS completed its 6th annual survey of community banks, generating valuable insight into the challenges and opportunities affecting community banks today. This year, 571 bankers from 37 states responded. The resulting data will help shape the conversations of policymakers and provide a rich resource for more industry research. So, what did we learn? Community banks across the country are experiencing increased market pressure, especially when seeking out new deposits. Greater competition for deposits is increasing the cost of funds, and 35% predict the cost of funds will have the biggest impact on their profitability moving forward. So, core deposit growth has emerged as one of the greatest challenges affecting smaller banks today. To stay competitive, community banks are embracing technology to expand their menu of products and services. 72% of bankers say it's important to adopt emerging technologies to meet customer demand. 27% report that being a first adopter is important to them. 91% of community banks offer mobile banking, and many services related to mobile banking are not far behind. Still, bankers remain appropriately aware of the risks that come with emerging technologies. The survey indicates that bankers are dedicated to mitigating online threats in order to better serve their customers. 96% say cybersecurity risks are important or very important for their operations. Community bankers indicate that recently enacted laws and regulations are having an impact on their day-to-day operations. Bankers report that the Tax Cuts and Jobs Act, approved by Congress last year, is creating new demand for their products and services. 42% attribute an uptick in small business and commercial loans demand to the tax cuts, and 26% report increased demand for mortgage and consumer loans. However, it is possible the new currently expected credit loss, also known as CECL accounting standard, could impact compliance costs for some banks. 23% report that addressing CECL will require additional staffing. And 22% also say they lack adequate internal data to meet the standard. Still, after compliance costs decreased 13% in 2018, community banks report an increase of 4% in 2019. CSBS is constantly striving to refine and enhance the annual survey in order to deliver new insight. That's why we partnered with 2 economists to complete the first ever Community Bank Sentiment Index. This index breaks down a selection of responses from the community banking survey as indicators of either positive or negative sentiments of the outlook for the economy. A score of 100 indicates a neutral sentiment. Anything higher indicates a positive sentiment. The first ever Community Bank Sentiment Index number is 122, indicating a significantly positive outlook. Here are some responses driving the results of the index. While 43% of bankers believe regulatory burdens will increase over the next year, an equal percentage believe their profitability will be higher in the months ahead. 69% anticipate that business conditions in their market will remain stable or improve in the next 12 months. 72% of bankers believe it's a good time to expand their operations, and 61% believe they will realize an increase in their bank's franchise value. The Community Bank Sentiment Index will allow CSBS to accumulate valuable insight on the outlook of community banks and the economy. The resulting data will provide a fuller picture of the outlook at the local level and a wealth of information that will aid policymakers and market watchers as we work to support and advance the real economy. For more information about the CSBS National Survey, including results from prior years, visit csbs.org. For more about the annual research conference on community banking that CSBS sponsors with the Federal Reserve and FDIC, visit communitybanking.org.